Wall Street already picked their blockchain, and nobody is paying attention. Everyone on the timeline is saying the same thing. There's no money left, altcoins are dead, crypto narratives are fading. But while most of the space is bleeding, Yuval Ruz, the co-founder and CEO of Digital Asset, dropped a statement that stands out. People are starting to realize that most crypto narratives have been nothing more than empty shells. He highlighted two of the few ecosystems investors are actually gravitating toward: Hyperliquid and Canton Network. Not because of speculation, but because they have real usage, and the performance shows it. Over the past month, Canton's token is up roughly 84%. Hyperliquid has surged about 83%. Everyone already knows what Hyperliquid is, but Canton is still flying under the radar. So the question is, what does smart money see here that most of crypto is missing? So today, let's break down what Canton Network really is, how it works, and our CC token price prediction in 2026. Larry Fink, the CEO of BlackRock, once said, "Tokenization is the future of finance." BlackRock and big groups like DTCC believe this future is coming. Canton Network is in a perfect spot for this because it already leads the institutional real-world asset space with over $350 billion in represented on-chain assets. So what exactly is Canton? In simple words, Canton Network is a special layer 1 blockchain created just for serious finance. Now, if you're looking for something also serious finance, quote unquote, go to SoPump. SoPump is the best on-chain Solana gambling website available to play on. It's my go-to when the markets are down and the trenches are lacking. All you gotta do to play is just connect any Solana wallet like Phantom or Backpack, then bet directly out of your wallet on any of their games. You can play their 50-50 Solana coin flip game, on-chain Solana blackjack, and crash. You can also get free rewards every day like this free Solana case and hourly Solana airdrops. They also have their very own token, SoPump, that you earn on every single bet. Now, if you want to play where I play, come to SoPump and type in my code CNJ. Now, let's get back to the video. Canton Network was launched in 2024 by a company called Digital Asset. It's not another Ethereum killer. It's not built for meme coins. It's not even built for retail. This one is built especially for big money players like the banks, stock exchanges, huge financial companies, real-world assets turned into digital tokens, the tokenized bonds, or real estate, for example. That is what Canton Network is in a nutshell. To understand Canton, you first need to understand why institutions can't just use Ethereum. Public blockchains are open and great for anyone, but bad for banks because of three big problems. First, everything is public. Banks cannot show their trades, client money, or secret deals to the whole world. Two, rules and laws. Banks need permission systems, ID checks, and government rules. And third, no private connection between systems. TradFi runs on hundreds of private systems, and they can't easily coordinate settlement across one shared public ledger. So the real challenge is, how do you get blockchain efficiency while staying private, regulated, and interoperable? That's exactly what Canton was built to solve. Canton was built for big finance like banks, stock exchanges, and major institutions. It lets them use the main blockchain benefits like fast, cheap, 24/7, while keeping everything private and following strict rules. Think of it like this: Ethereum and other public chains are big open parks where everyone sees everything. Canton is a tall office building with many private rooms. Each bank or company gets its own locked private room. They can still do businesses with other rooms safely, but nobody except the authorized personnel can see inside of the rooms. The quote-unquote magic corridor connecting those private rooms is called the global synchronizer, directing traffic without knowing what's inside of each room. There are three main parts. Number one, the private subnets or the synchronization domains, aka your private rooms. First, Canton is made up of private subnetworks. These are also called synchronization domains or, your private room. Basically, each institution runs its own private environment. Only the people inside that group can see what's happening. For example, JP Morgan might run a subnet just for settling bond trades. Goldman Sachs might have one for managing collateral. Nasdaq could run one for tokenized stocks. So instead of one giant public ledger, you get multiple private financial networks, all running in parallel. Number two, the global synchronizer, aka the magic corridor. Now, here's the part that makes Canton special. The global synchronizer is what connects these private networks together. It allows two institutions to transact. It doesn't see the details though. It only coordinates encrypted commitments like sealed envelopes, and it guarantees something critical that the trades happen in the correct order and everything either fully succeeds or fully fails. No half done deals. For example, JP Morgan wants to sell bond to Goldman Sachs and get paid in cash. The global synchronizer makes sure that the bond and the payment move together safely, privately, and instantly. And finally, number three, the super validators or the Canton's trusted big guards. Canton is secured by super validators. They are the ones making sure the Canton system runs smoothly without issues. These aren't random retail stakers, but a small group of trusted, regulated institutions. There are 13 currently, and they must be invited. That helps keep the network stable, fast, and legal. So the trade off is obvious. Canton is more centralized than Bitcoin or Ethereum, yeah, but that's exactly why Wall Street is comfortable using it. Institutions don't want maximum decentralization, they want compliance and coordination. Now, at this point, you might be thinking, okay, but why Canton? Like, why would big institutions choose Canton instead of other enterprise chains people always bring up, like Hedera or Midnight? All of these three are aiming for the same big trend, which is tokenizing real world assets, treasuries, bonds, real estate, and bringing serious finance on chain. So, what makes Canton different? First is Hedera. It's fast, enterprise grade, but Hedera is still one shared network. Banks cannot fully hide sensitive trades, positions, or client data the way that they need for high value settlements. Canton was designed privacy first for regulated finance. There's no compromises. Then we have Midnight. It's strong privacy via zero knowledge proofs, but it's more retail and consumer focused. It's also tied to Cardano ecosystem. It suits generally with Web3 privacy, but not the ultra regulated high stakes institutional settlement that is Canton built for. Canton is again built specifically for fast enterprise grade settlements, regulated financial institutions, interoperable, fully private network. So it's not competing for DeFi users, it's competing to become the settlement layer of institutional finance. That is the difference. Hedera and Midnight are strong projects, obviously, in their respective fields, and Canton was just targeting a different group. Canton already represented over $350 billion in institutional real-world assets value, with hundreds of organizations involved. Big names already using or partnering with it. DTCC, they handle trillions in stock settlements every year, JP Morgan, Goldman Sachs, Nasdaq, Broadridge, BNY Mellon, and just recently, on February 2026, Fireblocks added custody support. The biggest milestones ahead is DTCC's plan to tokenize a subnet of US Treasuries on Canton, with an initial rollout expected in the first half of 2026. Now, let's talk about the Canton's CC token. Despite the market cooling off, CC has been one of the few tokens still performing well relatively to anything else. CC isn't just a speculative coin, it's the fuel of the network. It pays transaction fees priced in USD for predictability. It rewards validators and app builders. It also helps apps work together. But what really makes CC different is its token design. Canton doesn't follow the typical fixed max supply model. Instead, it uses something called the burn mint equilibrium. Every transaction on Canton burns CC token. New tokens are only minted when incentives are needed to support the network. And already, there are more than 2 billion CC tokens being burned through real activity. So if institutions' usage keeps scaling, the network fees rise, more tokens get burned, supply pressure tightens over time. This creates a token economy where real value is tied directly to real settlement demand, not speculative trading. Allocation is also structured differently from most crypto projects. There are 35% that goes to super validators, and 50% roughly goes to builders based on real contributions. And in January 2026, Canton reduced issuance significantly, cutting super validator rewards from 48 to 20%, while shifting more incentives toward ecosystem growth. The result is simple. Canton generates fee-driven yield from real treasury settlement activity, not meme coin trading volume. And this is where CC token becomes different from 99% of crypto tokens. And finally, let's talk about my CC price prediction. CC is trading around 16 cents right now, a bit below its recent high. The drop isn't really about Canton itself, it's mostly just the overall crypto market cooling off while people wait for the next big catalyst. 2026 could be the year Canton starts seeing great movements in the adoption side, but price action wise, it's a different story. The general market is bleeding. Bitcoin might be heading down to $50,000 range. Investors are cautious of investing in big money in risky altcoins. No matter how bullish the fundamentals look, short term speaking, Canton might suffer a drop in the upcoming weeks. I'm personally targeting the 10-cent range in the following weeks. Then, depending on market condition, we might have a quick bounce back to the 19 to 20-cent range, the previous all-time high. Or we could dump even further to below 10 cents and move sideways until market is hitting up again and more bullish news emerge. That's when we can really see Canton breaking its all-time high and aiming for at least 25 to 30 cents. And that's it for this video. Thank you guys so much for watching. Make sure to like and subscribe to CryptoNinjas and comment down below what you think about Canton Network. Thank you very much for watching. I'll see you in our next one. Daily out.